Are you looking to invest your money but don't know where to start? Or maybe you're already investing but haven't seen the results you'd like. Either way, you've come to the right place. Investing your money can be a great way to secure your financial future and build your wealth over time. But it's not always easy to know where to invest or what strategies to use. Greetings, I am Joseph Cullen, a professional Wall Street investor for the past 36 years. And I am here to help by giving you 10 tips to start investing like a pro. 1. Invest in what you understand. One of the most important things you can do when investing your money is to only invest in things that you understand. There's no point in investing in something if you don't know how it works or what it is that you're actually investing in. When you invest in something you understand, you're more likely to make better investment decisions and less likely to lose money on a bad investment. So, take the time to learn about the different types of investments before you put your money into them. 2. Have an emergency fund. It's important to have an emergency fund that can cover your expenses if you lose your job or encounter unexpected expenses. This will help you avoid having to cash out your investments at inopportune times or taking on debt to cover your costs. Ideally, your emergency fund should be able to cover 3 to 6 months of expenses. You can keep your emergency fund in a savings account or a short-term bond fund. 3. Consider saving money in specific accounts. Depending on your goals, there may be specific accounts that make sense for you to save and invest your money in. For example, if you're saving for retirement, you may want to consider opening a traditional or Roth-era account. Or if you're trying to save for a down payment on a house, you may want to open a dedicated savings account for this purpose. 4. Consider using a financial advisor. If you're not confident in your ability to make investment decisions on your own, you may want to consider working with a financial advisor. A good financial advisor can help you develop and implement an investment strategy that meets your goals and fits your risk tolerance. 5. Review your investment strategy regularly. Your investment strategy should be reviewed and updated regularly as your circumstances change. For example, if you get married or have children, your investment strategy will likely need to be adjusted to accommodate these new life changes. 6. Diversify your investments. One of the most important things you can do when investing is to diversify your investments. This means investing in a variety of different asset classes, such as stocks, bonds, and real estate. By diversifying your investments, you'll minimize your risk and increase the chances of achieving your investment goals. 7. Consider your risk tolerance. Before making any investment decisions, it's important to consider your risk tolerance, that is, how much risk you're comfortable taking on. Your risk tolerance should be taken into account when developing your investment strategy and selecting individual investments. 8. Understand the fees associated with investing. This is critical. One mistake that many investors make is not paying attention to the fees associated with their investments. Investment fees can eat into your returns and add up over time, so it's important to be aware of them before making any investments. Understand what types of fees you may be charged. Evaluate whether the fees are reasonable. Shop around for lower fee investments. 9. Stay disciplined. Investing requires discipline. Reviewing and adjusting your investment portfolio regularly as well as sticking to your investment strategy can help ensure that your portfolio is on track to meet your long-term goals. Don't let emotions get in the way of making sound investment decisions. Be willing to buy and sell investments as needed. 10. Have a long-term perspective. Investing is a long-term endeavor. It takes time to see results from investments. Focus on achieving long-term goals. Don't get discouraged by short-term market volatility. Conclusion: investing wisely is one of the best ways to secure your financial future and build long-term wealth. Doing so requires knowledge and discipline. Following the tips above can help set you up for success as an investor. Remember to stay patient. It takes time for investments grow and reach their full potential.